Welcome back to Liberty and Finance. We have a returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update Thursday, January 14th, 2021. Andy, thanks for coming back on.
Yeah, time's flying by already, halfway through the first month. Good to see you, Dunn. Again, thanks for having me back. Hope you're well.
Yes, thank you. And people that really here appreciate your quick visits with us on Thursdays because you give us a quick insight into what's going on, the dynamics in not only the finance and economy, but also specifically inside the supply chains of the precious metals industry. And I have seen from my seat as a broker who people are calling, a distinct challenge recently at being able to have in stock what we had in stock a few days or a week ago. That premium starting to creep back up. So I guess if you could kick us off with, if there's a bigger picture than that you'd like to touch on first, that's fine. And then let's get into what's going on in the precious metals supply.
Yeah, remember, I've been saying for a long time that I thought the market would define itself by an inability to easily and readily source product. It's a common theme, a thread I've seen repetitively for almost 10 years. And here, lo and behold, here we are. 10 days into the month of January, the U.S. Mint runs out of gold, eagles, and buffaloes temporarily. The startling part about that is we're less than 2 weeks into the year, and they're already having problems keeping up. The U.S. Mint, I've always called the model of inefficiency, but the product supply, the chain of supply, done again, is fragile. We've seen that since last year, and here at a period of time where there's no reason why there should be problems. There are no real shutdowns of mines or mints or refineries, and yet the U.S. Mint is having problems already. I think that is reflection of a growing awareness of what's happening to the dollar and what's happening to the markets. People are waking up. Even those people who are ardent stock bulls are saying, geez, maybe we should protect ourselves a little bit because things just don't make sense when you see things down here on the economy and way up here in the markets. Something is resonating with people who never would have listened to that little voice before. I think they are. And that's one of the big changes I saw in 2020 was a growing groundswell. I would go to all these conferences and I'd see the same people year over year. And all of a sudden it's their brothers and their sisters and their nephews and their uncles and their parents and their financial advisors. And all of a sudden, we have a whole new group of people who are aware. And maybe that has something to do with cryptocurrencies. Maybe that has something to do with a stock market that continues to defy gravity, even though the engine of said stock market, the economy, seems to still be sputtering. So there are, I think, a growing number of people who are aware. And that is one of the reasons why getting supply is becoming more and more challenging. It's just, as we've talked about before, Rick Rule says across the whole matrix of finance in the U.S., 0.5% is allocated towards precious metals. But the mean for the last 40 years, since 1980, has been 2.5%. I would argue we are beginning to regress to the mean. And even if you get to that mean of 2.5%, and that seems like nothing, $2,500 invested per 100,000, that's a five-fold increase in demand at a period of time where the supply chain couldn't even take a third of that increase without completely breaking. And this is what we're beginning to see, I think.
From my personal experience over the past 2 weeks, well, just since the start of the year, I've been just getting hit up really hard by phone calls from many clients. Two things that you mentioned coming true. One, I had a fellow call up. He said, well, my dad already ordered from you. I'm going to get my mom to order from you, so she's going to call you. So mom called me and talked to me. Then he called me back later and said, now I want to order from you. Guy this morning said, I'm going to have my next door neighbor lady call you. So people are referring family members, neighbors, friends, that sort of thing. So that theme that you've talked about of the word getting out, the mind shift starting to open up. I remember it back in 1980 as a high schooler when I'd come home and the paper would have a full-page ads in there about people, dealers buying back silver coins from people, and the big, bold, how many times face value they were going to pay you kept going up. So it was just in the public mindset. 1980, I remember the same thing at every little strip mall or kiosks in the main mall or whatever. It's like, we buy gold, we buy gold, we buy gold, and the ads on television about that, selling gold. So the it's like the whole population forgets about it for a while, and then they suddenly remember it again as something that's been completely forgotten.
You know why that is, Dunnigan? It's because as human beings, we're motivated in two ways. We're motivated by greed and by fear. Fear being a far more intense motivational force. And people want to make money, and that's the greed side. And when the equities are going up, people are telling you should buy this stock and do this and buy that stock. And we're taught to sell part of that when we double our money and play with the house's money. Fear is a whole different thing. Not only is no one selling, very, very few, if any, sell. So the secondary market is barren. That's why we're so reliant upon a just-in-time supply chain, because the scarier the world gets and or the higher the price goes. Heck, silver was up 50% last year, 100% since March. Gold was up about 30%. In traditional terms, take Bitcoin out of the equation, those are incredible returns. And people are scared. And they're fearful. They're fearful on many levels. The dichotomy in this country, the split between red and blue and families and friends is incredible. And I think all of these things are bearing down, culminating with an attack on the Capitol that half the country feels was a false flag and the other half feels it was the lunatic right. Look, the bottom line is that the information that people are being inundated with left and right, nonstop, I think is creating concern and an awakening and an awareness. And we don't sell gold and silver, you and I, to get wealthy. We do it because it is wealth. It's been wealth for 5,000 years. And when you talk about return on your money, that's fantastic. I'm looking more towards return of our money. And I think that's what you'll find in gold and silver. And I think that's why people are waking up. They're afraid. They're looking at markets that are as overvalued as they've ever been by every metric. Yet, if it were just that, not many people would notice it. It's the fact that this is happening at a period of time when your eyes say, "What? This doesn't seem right." Your eyes see something, but your gut, hey, it's awesome. I'm making all this money, but your gut's like, yeah, what's that? How is it that that's happening? And I think that's what's happening. People are feeling something. I've been talking lately about playing athletics, and which has meant so much to me in my life. And if you're an athlete and you've played in any sport where you're really into the game, there can be a moment in time when the people watching the game may not notice it, but when you're playing it, you feel it. One little thing happened, and just like that, the tide turns, the momentum shifts. You can feel it. It's not something is readily discernible to everyone, but if you're deep enough involved in it, you can feel a change. And that's how I feel about this industry. Something's changed. It's not so fringe anymore. All of a sudden, it's become acceptable and sought after and warranted. And I think people are realizing it's been a good run, making all the money they have in the equities over all of these years. And now comes time to taking some of that off the table for their children and their grandchildren and for themselves. And, pigs get fed and hogs get slaughtered. And I think profit's not a four-letter word. So all you out there sitting on massive gains in cryptocurrencies or massive gains in your stock portfolio or your IRAs denominated in U.S. equities and dollars at a period of time when you could argue they shouldn't be there, not so much the cryptocurrencies, but the U.S. equities, the market has been gifted by the Fed and their bolstering of the economy and of the market best they can. It's not real, and at some point it's going to have to cool off, and the market's going to have to exhale, take some of those profits out, put it into gold and silver, and take some chips off the table, put it into real wealth. I think that's a great thing to do, done again. And this is the period of time, 2021, you can see already when the U.S. Mint runs out of product the second week into the year, something's not right. And the supply chain is, as you said, tenuous at best.
A lot of clients who have contacted me over the past month or two have said that they're kind of waiting because they're waiting for what they anticipate. They see that things don't look right, that their gut tells them the markets are not reflecting the reality of the carnage on the ground in Main Street businesses, unemployment, etc. So they're anticipating the potential of a major market crash that will take down everything, take down stocks, take down bonds, take down metals, take down miners. And they're saying that's what I'm waiting for, is I'm waiting for this smash down where then I'm going to go in and load up the truck on metals. And one of the things that I've brought up with them is that maybe that'll happen. We don't know when, and we don't know what from what level, and it's very realistic, it's rational to anticipate that things are going to pop and things are going to crash at some point. We've had Gregory Manarino on, and he talks about the non-stop money printing by the Fed that's just going to even go to larger exponential levels before it fails. So the trajectory might be up for the moment in the markets until that bubble pops, but the problem that I remind people is that their multi-step strategy in their mind of, well, once the market collapses, then prices will come down, then I'll get my money, and then I'll go shopping, and then I'll buy what I want at a good price, and then I'll have it, and I'll have gotten a good deal. And that's about 5 important steps, each of which can be completely sidetracked or derailed, made impossible by the kinds of things we're talking about. Because you mentioned back in March when the market crashed and the physical prices didn't go down as much as the paper price. And then people who wanted to go scoop up product might have missed it because it happened on a weekend or thinly traded time or something, and they couldn't get action. And then when they did go to purchase, they found out the products weren't available. All the dealers were sold out, and that's kind of thing, and premiums spiked. So that whole strategy of I'm just going to wait for a crash to get a good price, I'm really concerned for people's, and I let them know if they've already got a big stack and this is just frosting on the cake, I say, okay, fine, that's fine. But if you really don't have anything, if you're really trying to get your insurance in place, that's a lot of maybes to stack together. It's not the typical market behavior I think that we've seen when these rapid smackdowns happen.
We're not living in a linear time. Things aren't moving in a linear fashion. They're moving in hyper speed and skipping step 1 or 2 or 3. And like you said, in March when everything went nuts, overnight everything went nuts. All of a sudden the mines are closed and the mints are closed and the borders are closed, and no one saw that coming. And so I think that's really what you have to do. It's like buying a gun. If you come to grips with buying a gun to protect your family, you don't wait till bullets go on sale before you buy your first bullets. You buy your bullets and then you cost average on the dips. That's the way to do it. You buy and take your position first so you don't have to rely upon a set of linear events that work. When I look back at 30 years, then again, of market events and the way that things unfolded, it's interesting because almost everything we ever talked about has come true. And not patting myself on the back, I'm just simply saying that over 30 years, our conclusions were based upon mathematics, economics, and a sprinkling of old school logic. Those things come true, but never, ever when we thought it would or how we thought it would. I sat for a decade thinking gold should be over $400 when it was $250 and $300 in the 90s. And when it finally got over 400, I couldn't believe it. It seemed like it had been so long. And it was. But we knew it would happen, and we knew it was undervalued. And I guess the point is that everything that we've ever talked about from an economic standpoint has come true because you can't hide from Mother Nature and from mathematics. And if you've been in this business as long as I have for 30 years, those conclusions, if properly formulated in mathematics and economics, will come true over a 30-year period. But in looking back at them, I'm glad that they did come true because I've got strong fingertips and I've been able to hang on. But they never came out the way I thought they would. And that type of linear progression in your mind rarely, if ever, happens. I can think of one event. I sold my house in 2004. I put all my money when my wife was pregnant, 9 months pregnant in the middle of winter here in Minneapolis. Biggest fight we ever got in. I said, it's going to work. We're going to rent for 1 year. We'll put all our money into silver at $9 an ounce and we'll rent. And then when silver goes up in a year, we'll sell it and build a house. Well, it worked. The linear progression worked. It only took 6 years. And 6 years of renting. It was the best decision I ever made personally from a financial standpoint. I put $240,000 of equity from the sale of a house into silver at $9, sold it at 40 something, and built a dream house. I thought it would take 1 year. It took 6 years. Point of it is when you look at things that are from a mathematic perspective, chances are they'll come true. But when variables are thrown into the equation left and right, as they always are, it's a whole different ball of wax. So I think what we're talking about is valid. It will come true, just not the way that we all see it. And waiting at a period of time when the market has been kind of defined by fragile supply chains is the worst possible thing you can do if you're waiting to buy that initial box of bullets. Make sure you have your box of bullets. And if you do, then you can cost average on the declines and on the dips. That's good investing. But waiting for that big move to protect yourself and your family after the Titanic hits the iceberg, you may be one of the few that doesn't get on the life raft simply because your intentions were great. You knew it was coming. You're just a second too late.
Another, on a smaller scale, then I have examples over the past, just since the new year, where people call me and they say, okay, I would like to do something fairly sizable, but give me a proposal. So I write up a proposal, pick out products that are we talk about their strategies, their objectives, everything, get it figured out. Okay, this is the best fit for you. Yes, they agree. Send it to them, and days go by, a couple days go by. 4 days later, they call back and go, I'm still thinking about that one thing, but can you just refresh the prices for me? I say, well, I tried to refresh the prices, but those products are no longer available. Those are the 2020s are sold out, that kind of thing. So now I got to change it, find out some other products, and okay, now here's a new proposal. Send them off. Come back a week later, go, okay, I think I'm almost ready here. It's like, well, the prices have changed, the premiums have changed. So that's what we're starting to see is premiums are starting to, after having been in a multi-month moderation for premiums. Now what I'm seeing is premiums on many of our more popular things are starting to turn north again.
Well, two things. I'd like to answer that two ways. One, you and I talked about $20 gold pieces as our last special. Look what's happened today. You saw premiums are straight up. I was on a show on Arcadia Economics a week or two ago, and I mentioned this, that I see premiums starting to move up, and I was challenged by it, actually. And I said, look, premiums may have come down a little bit in some places, but in general, premiums not only are way higher than they've ever been in my entire career, but they're also in some areas beginning to move up. And I can see, based upon what is available to me on the wholesale side and from the mints and what have you, that it takes longer to get it and it costs more. And so I'm glad you're validating this to the public. It's true. Look, we are the pimple on the elephant, all of us who want precious metals. The elephant is in the bond and the stock market. The pimple on the elephant is very, very small. And if what I'm saying is correct about an awakening from, the top half of the elephant is going to wake up and say, geez, we got to get with the pimple. And when that happens, I think you're going to see a massive shortage of supply overnight. I'll put it another way. I like Bill Gates woke up and said to his wife, Melinda, let's go spend $5 billion and all the money we just made on vaccines and go buy some gold. There'd be nothing left for the entire industry. There wouldn't be. It's a situation where it's a very thinly traded market, and you will see before 2021 is over, if I had to guess, an inability to source product the way that we normally do. It's going to be delivery delays. It's going to be high premiums. It's going to be nail biting, because as the world is changing around us, you want to have that life raft, that box of bullets. If you don't have it and you're waiting for some sort of an event in a linear fashion, I would bet dollars to donuts that it does not unfold the way that we think. It'll probably get to where we think, but not in the way that we think.
If we could turn our attention to weekly special, you mentioned a couple of things there. You mentioned the $20 Liberties and St. Gaudens that we had described as being a real multi-year value because they were getting down close to the cost of American Gold Eagles, and now those premiums are starting to rise again. So what else can people look for that would give them that access to that pre-1933 numismatic, certified, uncirculated, but at a lower price point?
Yeah, I looked real hard before our interview for something, and with your help, we were able to find the MS61 and MS62 $10 Liberty that still looks real good, and we have a couple hundred of those each. At 1,049 and 1,069 on the MS61 and MS62, you're right there with the same price basically as a half-ounce gold eagle. And that's unusual and unheard of historically. In 30 years I've done this, not only is the $10 gold piece more difficult to find than a $20 gold piece, because put yourself back 100 plus years ago, $20 was purchasing power of north of 2,000 back then. being that the dollar's lost almost 100%, 98% of its purchasing power since then. So figure 20 was 2,000 minimum. A loaf of bread was a nickel back then, so money had a different value. So $10 would have been used much more frequently than 20, and the fives more than the tens, and the 2.5s more than the fives, etc. So there's just fewer of the tens out there. Typically, they have a higher premium than the 20s, almost always. Kind of a sweet spot right here with what we can offer our clients on the MS 61 and 62. Now, I would caveat that by saying, just like last week when we talked about Saints in 62 and 3 being right next to Gold Eagles, how fast can that change? This is exactly the whole discussion that we've had. This is an environment where people are awakening to value. Value is hard to find these days. Everything is overvalued based upon distortions in money creation and interest rates, and finding value is really hard. 61 and 2 grade $10 Liberties are as good of a value as the St. Gaudens were last week. I think it's definitely something that your listeners would be benefited by accumulating if they're buying gold. MS62 and MS61, $10 Liberty, certified PCGS and NGC. One last point, Dunnigan, when we talk about value, it's hard for me not to notice a 72 or 3-to-1 ratio still, gold to silver. So while we just talked about buying gold, look, I would never count gold out. The reclassification of it as a tier 1 asset and the massive acquisition by the central banks, the pulling off of the gold by the family offices and the sovereign wealth funds. There's so much happening that is gold friendly, I would not count gold out. But what I would also say is that I think it's a once in a generation opportunity right now in silver. Now, we've been talking about this since March when the ratio was 125 to 1, and we talked about regression to the mean, falling to its average price. Well, over the last 150 years, that average has been about 42 to 1. So it's already regressed almost halfway from 125 to 72. I think we have a long way to go to the 40 to 1 range, and probably lower, as we've talked about Keith Neumeyer saying it's coming out of the ground at 8 to 1. So, I think silver is a fantastic opportunity, but ultimately, down the road, I think we want to be in gold. This is a way to do it. You trade your gold for silver. If you have some extra gold that you would like to increase its stack, you trade it to silver at a 72 to 1 ratio. And when it falls to its mean of 40-ish to 1 or lower, as I suspect it will, you trade back into gold. And if we see what we saw, for example, in 2010 with an 85 to 1 ratio, one of the few times in human history it got that high, within 7 months in 2011, we had $50 silver and $1,920 golds, which was 37 to 1. In that example, if we saw something like that again, at 37 to 1, you switch back into gold, you've now doubled what you started with. This is a way to increase the amount of gold that you own without spending any money. We're able to do this for our clients very easily, to assist on shipping back, to make no money on the buy side when they sell the gold back to us, convert them into silver at amongst the best prices in the country, and monitor it for them and be the first ones to say time to switch back to gold if you want when that time comes, through our weekly discussions and what have you. I look at that as a massive opportunity, and there are very few anomalies that I have not taken advantage of that haven't panned out. When you see an anomaly in price, like a 72 to 1 ratio truly is, it bears taking advantage of. So I know we're sending mixed signals here, and I'm not trying to. On one hand, in the world of gold, the numismatic coins to me are the very best way to own it if you can buy them at a good price. And they're an amazing price, and I would not count gold out. But for those people who already have a nice stack of gold and a nice stack of silver, trading your gold into silver right now gives you the ability to, I think, double or better that amount of gold in a short period of time. Who knows how long that will be? But I do see the trend regressing to the mean, to its average. And as Keith Neumeyer said, Andy, it's coming out of the ground at 8 to 1. How long do you think we can sell it at 72 to 1? In other words, we're already running deficits. It's coming out of the ground 9 times less than what it's priced at. Figure all the costs associated with it and call it 20 to 1 as a real price. Okay, fine, 20 to 1. At 72 to 1, you switch your gold to silver, and if we got anywhere near 20 to 1, you're talking almost 4 times the amount of gold you'd get back when you switch. So it's not pie in the sky. I think it's just mathematics, like we were talking about before. Mathematics come true. It's just a matter of how long. You take the manipulation out of the game, and boom, all of a sudden you got a gold to silver ratio well below 30 to 1. And that's what, geologically, the ground is telling us it should be.
Well, that's a great opportunity for people to be aware of. And just the question that people always ask about this is about the I'll call it friction, or the basically the cost of doing the swap. And you're pointing out that there's no premium charged on the sellback side of the swap, and low single digits charged on the purchase. So of that ideal, that 72 to 1 ratio, they can probably still achieve a pretty high ratio, not exactly 72 to 1 because there's a low single digits commission. Yeah. And then similarly on the swap back, but still we're talking about a significant anomaly that provides people the ability to basically use strategy and intentionally set themselves up for a bigger gold stack later on.
Look, when it was 85 to 1 in 2010 and 37 to 1 in 2011, even if it cost someone 10%, who cares? You still made 100%. And you still doubled what you started with. And so I think, here again, let's be realistic. With gold at almost $2,000 an ounce, if I told you there's a way you can close to double what you started with without spending a penny, there'll be some costs, there'll be a little effort. So what? In the end, I think there are very few opportunities like that in a lifetime where, not only do you get that opportunity, but you're not leaving the asset class. So, silver is a substitute for gold, in my opinion. It just takes more of it to get the same result. I'm not talking about industry, and I'm just talking about its place value in history. It's a precious metal. It's wealth. It's been wealth forever. And so if it takes, if you have to have 70 some pieces of silver eagles for one gold eagle, so be it. But the ability to change it back if you want, to me, is significant. And I think that'll happen. All of these things that are centered around mathematics and history typically come true. The further away you get from historical averages, the greater the magneticism that pulls you back to the center. That's just basic statistics, and I think you'll see that. And this is an opportunity that I don't think will last long. I really don't, because if you go and look at a chart and you Google gold-silver ratio last 100 years, you'll see a chart pops right up. Take a piece of paper and put it in the middle of the screen, and you'll see almost all of the action, almost all of it, is well below 45 to 1, 50 to 1. There's very little of it above in that high area where we are now. Very little over the last 100 years. So, here again, regression to the mean, the mathematics. It's like your favorite baseball player starts out the month of April batting 1,000. You know that by the end of the year, he will be closer to 300 than he was to 1,000. The law of averages are there for a reason. It's January here in Minnesota. It would be like if I walked outside and it was 80 degrees, I'm not going to pull my golf clubs out. I know that it's an anomaly. This is an anomaly. It's one that's lasted longer than I ever would have anticipated. But I will say this. We were talking about it, you and I, in March at 120 to 1. And lo and behold, here we are. If anyone would have done that and switched back right now, they nearly doubled what they started with. So it happens. It just doesn't happen when or how we think. And the train hasn't stopped moving towards the hub of regression, and we're on our way there still. So 40 to 1, I think, is easy. 30s or 20s, maybe not as easy, but very, very possible when you see 8 to 1 coming out of the ground.
Andy, thanks for that tip, and people mull that over and let us know what you think. We'll always remember to go to sign up for our free newsletter so you'll get not only this, but all of our interviews and all the notes and all the links associated with them by going to libertyandfinance.com, and over in the left-hand margin, just put in your name and email address. We'll make sure you get on our free newsletter. And Andy, if people want to purchase precious metals, they can certainly reach out to me at libertyandfinance.com. They can also call me. The phone number will be on the right after this, 419-819-9209. Happy to help you out in any way we can. Awesome. And just thank you very much, Andy, for joining us here on Liberty and Finance.
Proud to be a part of it. I don't miss any of the guests that you have. Gregor Manarino is amazing, as is Alistair McLeod, and so many of the people you have on. And we should all be very thankful at a period of time where it's more difficult to share real information to people and more challenging. You're doing a heck of a job. I'm glad to be part of it. I look forward to our Thursday conversations, and I look forward to next Thursdays as well. In the meantime, I hope you have a great weekend, well-deserved, I'm sure, and stay well, Dunnigan. Always good to see you.
Thank you. And everybody make sure you don't miss the Mugs and Medals from Miles Franklin that's coming out this Friday. That's tomorrow, January 15th. We'll put out once a month, a great discussion. And Andy, thanks for pulling that together and pulling all the great panelists in for those.
Yeah, they're a lot of fun. The Aiden sisters were a hoot, and Big Swear's an amazing guy, and all the others that have joined us over the last 3 weeks, and you being a fixture means a lot to me. I appreciate it. Thanks for sharing that as well, and I'll look forward to picking back up with you where we left off here today next week, but stay well in the meantime.
Take care.
See you later.
This is Donegan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.